Hello and welcome to successfultrading.com. Wherever you are, we want to tell you welcome to Successful Tradings on this Easter weekend. Especially given the fact that yesterday YouTube announced that we reached our first ever 100 subscribers. So we don't know who subscriber number 100 is, but whoever you are, please reach out to us. We want to celebrate you. In this video, we are going to showcase how we're able over the past couple of weeks to generate 1000% gain on the same option position. This is not seen unusual for the subscribers of successfultradings.com, but this time around, it wasn't just once. It actually happened twice. Without any further ado, let us go ahead and get started. Okay, so here we are. The stock in question or the ETF in question is, you should be familiar with it. It's not one of those rare stock, but this is really a known stock already. For those who are coming to the channel the first time, we have been showcasing or sharing this Fibonacci retracement. I'm just using it here. I can actually remove it maybe as of now and draw it again. I just wanted to show where the market stand overall compared to that March 23rd bottom, so to speak, at well, in this case for the IWM, this is the Russell 2000, also known as small caps. Let me just pause here a little bit. If you are a newcomer to trading, a lot of the terminology that we use may not be familiar to you. So there is something actually that we are doing to that here at Successful Tradings. So you will be hearing about this stock option dictionary that we recently created. It's going to be free to you. So go to successfultrading.com blog and just by emailing us, providing your email address, rather, you will be able to get access to this, where all of the common terminology that we use on here, the definitions are provided, along with something exciting that we are setting up that we will be talking about in our live channel. So go check it out on there when you have some free time. In any case, I mean, it's Easter weekend. I'm hoping that you are relaxing, so you can turn off Ozark on Netflix and just binge watch Successful Trading channel for the entire weekend. That will be fine by us. And then you go tell your friends so that they could subscribe as well. In any case, let's come back here to more seriously. Let's come back here and describe to you this call option example that's really just generated a massive gain recently over the last couple of weeks here, or actually a little bit more than that. I think it was like 18 days. We're going to actually give you the detail. So it's coming from this ETF, IWM. We're currently sharing its chart on TradingView, as we usually do. Again, TradingView, it's the tool by reference that we are using. I've actually helped some of you set it up recently, so be encouraged. It's okay to start even with the free version. As you progress into your learning, you are going to be able to subscribe to the Pro or Pro Plus version to be able to get more features. So that's perfectly fine. So back to IWM. IWM is trend of since March the 23rd, where it hits a low of 95. I mean, if you were lucky enough to, let's say, purchase options, your call options on this day, you would have made money, and a lot of money. And for us, we're going to show you two occasions actually where a position that we purchased actually were able to reach 1,000%, over 1,000% gain. Actually, we're going to calculate that percentage not only once but twice. So how are we going to do it? We go side by side. All right, let's go here. I'm going to bring, as you're familiar with now, I'm getting a lot of questions from the subscriber on the channel, and I feel bad a little bit about this that I'm showing as of now. Well, this that we're showing as of now, for some of you are very familiar with it. It is the call option chart. not the stock itself. So that's something that we have talked about, right? So the difference between charting the stock itself versus charting a particular option. So here, in our case, to the left-hand side, we have the IWM ETF. That's the small cap ETF. Oh, that's we're showing the chart here, let's say from the 23rd, whatever that bottom was, all the way to this past Thursday, April 9th. On the right hand side, so that was on the left hand side. On the right hand side, we are going to be showing the same thing, but the same thing, well, relatively speaking, the movement of an option over that same period of time. So that option here is the April 2020 130 call on IWM. So let's again reset here so that everybody has the same understanding so that you can sink in. On the left hand side, we have a chart of IWM, the small cap ETF, also known as Russell 2000. That was trading on the 23rd. It closed at 99.9, so about $100. Okay. And on the right hand side, we are looking at the options expiring this coming Friday. That's what it means, right? We have talked about it, that if you're a newcomer on here, the expiration here actually is helping us here because they're putting the exact date. So the April 17, that's the third Friday of the month. And typically they will just call them April 20. So that means the third Friday on that. But here they are spelling out on here. So this is how it has gone, folks. Okay. So where were we able actually to generate that 1000%? So let me showcase to you. So here, the price of the option is going to be here. So the open, the high, the low, the close. So let's say on the 23rd, around the close, if you were to buy this option, the 130 call for IWM, it was as low as 6 cents. You can see that, right? Where this is right now, and we are reading the price here. So at around the close on the 23rd, let's go all the way. It's worth 13 cents. Okay, so you buy that if you were to buy that call, which for us we did actually the first time we bought that one. We bought numerous of them. So we bought one at 13 cents, but we bought others that are further up as well. So they went as high as on the 26th, meaning how many days later? So this 23rd, 24th, 25th, 26th, 3 days later, those 6 cents calls that you purchase, they are worth as high as $1.84. Let's pause for a minute here and bring our calculator because this is what's worth. This is the power of option, and the question that we keep getting: how much money do I need to trade option? In this call example, we're actually showcasing that the leverage that you have, the stock itself. Let me not hide that part on there. The stock itself is trading, or was trading in the vicinity of $100. So if you bought one stock of IWN back then, by now you will have made maybe 23%. Okay. As of the 26th, from the 23rd to the 26th, you will have made roughly 17% on your purchase, but you needed $100. For us here, we're show you that on these options that were worth 6 cents. Okay, so meaning that with $10, you could have bought one option with $10 because at least if you're trading from the US, the commissions are 0. So it's just the fee. The fee for an option for an option is not that much. It's a few cents, and most brokerage firm, they charge you in the vicinity between 50 cents and 65 cents per contract. E-Trade, I've told you guys, for me, I've been trading with them for the longest of time. I pay 35 cents per contract. So I've been trading, and I trade a lot of options with them. So when you're a customer like me, you can call them and they can lower that price of your cost on there. So for us, we want to measure the percentage gain between the 23rd at 6 cents, or we can even round it up at 10 cents because, I mean, at 6 cents, let's say you were not paying attention or whatever, 10 cents, whatever, just to get a general idea. The high was as high as $1.84. So we're going to take 10 cents to $1.80. So that's about say $1.70 of gain on there. So $1.70 divided by 10 cents, that's 0.1. So I need to be careful with the math and then multiply that by 100. This is a whooping 1,700% for this move here in 3 days. Do I have my, yeah, I think I have it. So we're talking this move here. This is the move, just this move. Got you 1,700%, meaning you multiply your initial investment by 17 times. So let's say you had $10. Your $10 would have become $170. It may not appear that much, but now you can parlay that $170 into something else. The market has been very volatile. Again, you can find a definition of that term if you are starting your brand new in our upcoming ebook that we will release. Just go to the blog successfultradings.com, and on the right hand side, actually on all the pages, you can get that for free into your mailbox within a minute by just providing your email. So from your $10 or within 3 days, $170. Okay, then let's say if you were to start with, instead of $10, $100. So $100 17 times 1,700. Straightforward, right? Okay, so that option was not done. So you took your gain here. Maybe, I don't know, if you were to apply the Melissa rule, the way that the market has been volatile, you could have hedged. So you could have made money on the way down, because here the call from 180 actually lost value from that 26. I'm looking at the date at the bottom. From the 26. By the time we are April the 2nd, actually let's go to April 3rd, my friends, and look at this again. Lo and behold, this position is trading as low as 2 cents. That's the call, meaning that the puts, if you were to write it down, you would have made money as well. But that's not our purpose today. We're not talking about puts today. We're talking about call option examples. So here now, on the 3rd, you have another opportunity. The beauty of this option, while I'm showcasing it, because as of March the 23rd, when it's all started, right? Compared to April 17, you have plenty of time. So you have flexibility. One of the things that you will discover trading options is the impact of time through a KPI called theta. It's part of the dictionary again. So in this case, you had plenty of time. So you had flexibility on just chilling and observing the movement of this option. So that's what happened on here, from $1.84 high to 2 cents in a matter of how many days. So on the left-hand side, let's go ahead and showcase that to you. Sorry for the mini screen. We can put the calculator away. We know that it was, this move here was 1,700. So we are talking about this move. It took it 6 days. Yes, because the third, this is the third here, is the same third that I'm looking at here, but this time for the option, for it to be worth 2 cents. We saw 2 cents, but 2 cents, 4 cents, that's the same thing. I mean, $3 versus $4. So imagine earlier we said that you were able to get your $10 to 170, right? So now if you take your 170 here and bought those 3 cents or whatever, assuming that you didn't even increase that money. Let's say you specialize only because you are watching this video on call option example. So you are one of those who just specialize in maybe you're comfortable trading calls. That's perfectly okay, because that could be your niche. That's okay. We will talk later on about the drawback of such a methodology or technique, because sometimes you will just have to say sideways on the sidelines, but that's fine. So now you are equipped with a capital of $170, and these calls on the third, they are worth 3 cents. You already have knowledge, because that's very important. That's why I like this viewing the charts of the option. So yeah, I started earlier by saying that I feel bad for a lot of people asking me, where is this from? Where can they find this on the brokerage with the platform they're trading with? I do not know, folks. I sincerely apologize. I had one person who was asking me. I think the gentleman was trading on a Robinhood or Webull. So, and he was asking me if I know if this chart where we are charting the option over time, it's available over there. I do not know. So, if anybody knows, please leave us a comment such that we can help each other understand that. This is a great technique that I've been sharing with you on here. The chart of the options tell you a great idea about a good entry point, a good exit point, but it also tell you in this type of scenario that if a stock, a current position option is currently trading at 3 cents, and where it's coming from, $1.80, my friend, that's like a free trade, really, because guess what? How low can it go from 3 cents? Zero? Meaning your risk is very small. You have plenty of time left on that before that expiration. So that's what happened for us. So the second time, I think around April the 6th or something, when it reached maybe, I think it was 10 cents, we bought those contracts again. We bought those contracts again. So, and we were able to ride them this past Thursday where the market was just bizarre. And so we sold them pretty much at a high because, again, using the technique, the application that if you're outside of the Bollinger, something like this bullishly, take the gains, because two things will happen, right? Either this move will continue. In that case, now you have capital to risk less of it, or it will cool off, which it did, actually a little bit. It cooled off here. The low is $1, and then it went back again at $1.80. So always take your profit here. If you see that the option is outside, way too much outside the Bollinger. This is the first 15 minutes on here. I have a rule of thumb. If I'm trading a position and it gaps up tremendously in the morning, no sweat about it. If I have a lot of it, meaning several contracts, I think I could take partial profit. But if, let's say, I have 1Z, 2Z contract, you will take the money, because by the end of the day, you will have another opportunity to enter with less capital. That's how you will be able to maximize your gains, your profit, and increase your overall account value. So here, showcasing this move that gave 1,700%, and then this other move here from 10 cents again. What high did it reach? Pretty much the same, guys. 100. This time the high here was $1.79. So 10 cents to 179. That's another 1,700%. So not only once but twice within a span of 18 days between here and here. This 130 call on IWM was able to return more than 1,700%, not once but twice, thus proving to us the leverage that option trading provide, especially in a volatile market such as this. I hope you get something out of this video. Please share, comment, and more importantly, subscribe to the channel so that we can continue to cater the content of this channel to your liking. Thank you very much, and have a great Easter weekend. Bye-bye.